Hey folks, welcome to the 3rd of January 2022. This is our first session back for these markets for 2022, and I mean there's been quite a bit going on over the holidays since Christmas Eve, I suppose, in these markets. But generally, I think overall we're holding quite steady, still on the highs on equities. I think oil's got a lot going for it at the moment, given the supply crunch that seems to be quite pervasive now as we stare down the barrel of 2022. OPEC meeting tomorrow, January 4th. So, all eyes will be on that meeting, and probably best not to really get involved in oil ahead of that meeting at the moment. And I don't expect really huge opportunity to present itself in oil today ahead of that. Um, let's get over to these charts and have a look at what we have. So you can see generally we have new all-time high put in there on the 30th of December for the SPOOs, 47.99 and three quarters. Nasdaq is now sitting in this area of congestion. Was a selling area, may be now turning into a supportive area. But really, let's go around the houses here and have a look. And just let me turn on some light here as well. So yeah, all right. Getting over to the euro, you can see that really, not much has changed. We've been in this lower congested area. We are looking at weekly bars here, and really coming into that Christmas week. If I just push in and zoom in on here, you can see that Christmas week has been, putting in after the consolidation that we had through November and December, now pushing up and breaking out of this sort of congestion zone, and should be good for a continuation after the pullback it's had on the downside. And you can see that top left of your screens here, just below S1, little pullback. We should look to go on higher in the euro over the course of the next month. I think that's going to be, a bit of this headed to 15.645s on your chart. And definitely the baseline of this market is down here at 12,360s. So, is there a little bit of heat to come out of the Dixie? I think so. As we kind of get into 2022, I'm not really going to be looking to personally to get into any massive trades at the start of the year. I don't actually have a huge view on equities or commodities at this time. Gold is doing quite well, but let's look at the cable, sterling to the USD here. You can see that bottom put in on the weekly bars here. Bottom put in at the 32.02s, which is actually quite a nice little level all the way back here to 2017, 19th of June 2017, the low that week. Bit of a line in the sand for the market since 2017, trading above and below. Lots of opportunity to be trading off of that level. So it came into play really the 6th of December there. You can see the week of the 6th of December, the following week, and the week after that, the 20th of December, putting in that support, and up she goes. And so, while we are a little bit elevated from there, could be time for a little bit of a pullback in cable before then kind of bursting on through the highs that we've seen overnight. Actually not overnight, but yesterday. Yesterday would have actually been New Year's Eve. So, I think further continuation on, you could be risking your trade here off of sort of a baseline on the 35.19s, and then look for that to get on up there. But at the moment, I'm not filled with any compulsion to get into a long situation on cable at this time. Gold is making us actually everything's kind of quite buoyant on the bounce back here from the APAC lows. And so here's gold on the weekly. Levels to be aware of. Really, we're in this range, 1782s up to sort of 1854s, and that's the high of the week of the 13th of April 2020. on the high, and it's the high of the week of the 9th of March 2020. You can see this sort of range that we're working in here. Do I like anything about gold right now? I think if we get S2, I'd like to be a buyer there on this area. I don't know if we're going to fall back below this congestion zone that I have on my charts here, which was essentially this sort of stepped up here, and then we sort of flatlined for this pretty much this whole day on the 23rd of Dec. And then that little zone that we got from this sort of area, I think it was Wednesday. No, that wasn't a data point or a data release point. You can see that was very well respected thereafter, and so I think if we were to come back and test this area, well, I think it's clean. It's going to be clean support around the S2 1810s. But again, I lost quite a bit on gold last year. Not really something I want to repeat again this year. Is it different this year? Are we going to start like piling into gold for the inflation trade? Who knows? Who knows? But I certainly think commodities still have a lot more to run on the upside. You're seeing that with lumber, you're seeing that with coffee, you're seeing that with gold at the moment too, but certainly not as aggressive to the upside. And let's get on to these equities now. So the equities, of course, everyone's trading. And I haven't touched this chart really since we left on Christmas Eve, or the day before Christmas Eve, the 23rd. And I mean, I like the congestion in this area here. It's quite easy to find to kind of find this on your charts. You have this high here. This is a daily chart, high of the 5th of November, and all these multiple sort of pushes up, and kind of struggling market to push up above that 16,451s. Just couldn't do it, right? So sort of a zone. Look at all the excess on these highs here. If I zoom right in, you can see all these excesses put in here. That kind of motivates me to really say, well, there's a selling zone here, and what is the shape of that? I mean, is this the zone, or is it even deeper where we have more access into? And I like this zone here, and that's how I came up with this sort of supply zone, if you like, using supply and demand. We've had demand up here, but a lot of supply from the excesses into this 16,451. So look, I mean, if I wanted to be long this market, look, holding, you want to see the market push and then pull back onto the 16,451s for the longs, and the inverse for the downside, and you could probably even lean against that 16,361s low of this zone to look for your short. And so, but at the moment, we're consolidating in here. Nothing going on really apart from the rent here. Asia Pac range is pretty much holding here on the Nasdaq. The UK is, of course, on a bank holiday today, so the faithful few in the Dublin Capital Room will be on. A couple of them already rising their heads up this morning to say they'll be on trading this afternoon. Probably all quite tired of the Christmas break, which can push on and on and on. So just had to update some of my data on the SPOOs here this morning, and unfortunately that's not good looking, so I'm gonna have to just delete and download a lot of this here. So I'll just quickly get this done. Recalculate. All right, we'll wait for the SPOOs chart to update, but essentially, you can see here we pushed into making new all-time highs through the holidays. We are pretty much sitting back up here in this range, like this 60-minute full screen. So here's the sort of range that we're working within. I would probably like a long 47.70s and a half. To see if we can trade back up higher here. But not really too interested at this time, given the hour a day. I think what are we here in Dublin? 5 minutes past 10. So not too interesting really. I think we've got great support 47.35s down here just below S2. Should we sell off? I don't know if we have that level of catalyst in the market today. Looking across in the data slate for the rest of today, we have 3 o'clock construction spending for the US. And that's about the height of US data for today. So, I don't think we're going to really have that downside catalyst or indeed, mega upside catalyst to break us out of this range. So, really, that's your area of operation today. Let's see if my daily has updated. No, having some serious problems with the daily chart there. All right, going over to the Dow. Hopefully we don't have the same problem with the Dow data. And here we are on the weekly chart. I'm just going to rip some of this information off these levels. And yeah, there you go. So, we have done that new all-time high on the Dow through the holidays. Some real problems there with this. There we go. So 36,572's new highs on the Dow, put in on the 27th of Dec. Currently trading just a wee bit below that, but really not that much at all. A bit of a morning trend breaking here. Morning trend break opportunity here should this start to break down, and so you're seeing this sort of shape to the market. I do like trading these when they break, so you come down. If you are regularly sort of looking for these opportunities and trading on the breakdowns, you can get quite biased to trading these on the short side, which actually it can kind of screw you around a little bit. So do be open to, when it comes down, do we have the catalyst to go below? And 9 times out of 10 on the third test, these actually hold for the third test, go bid. Then you get a fourth test, and the fourth test, of course, well, most of the time breaks. So there's an edge to be had on what I call the morning trend break strategy here. So, that's just a little thing to be aware of on the Dow. But do be aware that you're probably just going to trade back up on the top of this range, maybe put in a new fluffy little high on the Dow and then sort of offer down again from there. Looking across the rest, I don't really see anything inspirational that's been happening in the bonds, like the Bund or the T-notes. But of course, oil to round off this first session of 2022. Here's where we sit in the bigger picture of oil. Switch over to a weekly bar, just kind of make this chart a little less busy. It's just going to take a second to download about 10,000 days here of data. But yeah, as I said at the top of this, you're better off waiting for a bit of OPEC confirmation and chatter, which will be tomorrow. I presume it will be the usual sort of delegates arrive at 1:30. And you should get decent chatter coming out from about 1:30 onwards. So do be aware of that. I think the expectation coming into that meeting is that they're going to confirm that everyone's struggling now to keep up with the quotas to commit to the sort of production hike that they've put back on in November. And that's actually going to be incredibly bullish if that narrative holds, that essentially these OPEC members are struggling to now have that increased output. And one of the bigger telltale signs of that being more of a fact than a rumor is that Russia production is actually flatlining. Now, if there is one person in the room who loves to produce and never cut back, it is Minister Novak and his buddy and boss, Vladimir Putin. So they do not like scaling back in production. So if those guys are flatlining on their production increases or attempts to production increase, that's quite a bullish scenario for Brent and WTI. So here we are on the weekly bars. On WTI, let's just have a cross-section look here. This 73.98, you can see all the way back to just above my head here. This is the low of the week, the 16th of March 2015. And, it's quite a big level, but I think for us to generally hold over this, look, I don't know how tradable this is as a day level, as a daily intraday level. You could be risking off of this and then looking to get into swings, but if we're trading above here, generally you will want to be long this market, and trading below, generally you will want to be short. So it's quite the inflection area. Last time we did sell off from here, 73.98. So, I mean, went down to the 200 EMA, then at $60. So that's like, that's 13, nearly $14 of a sell off, and it's quite an inflection point, right? So look, I think 77s, as you can see from the 60-minute intraday chart here, the 77s level above, quite a bit of excess pushing above here. Lots of interest for the sellers. If we come back up against it again, are those sellers going to be there, or are the buyers going to lift it? And if the buyers lift it, we can get an hour or two closed above here. I think that's incredibly bullish for price. And next step up, 79.81s. I am the perma bull at the moment for oil for the last 2 years, maybe 3. So I think anything down onto the 73 or 74 handle around S2 today, I think that should be bought. A stop out there. I'd be looking for support to come in, not too far below there, to be honest, not too far below. So we are trading the G22. Volume has switched from the DEC contract 21 through to the G22 contract, which is the just let me confirm, February contract, just to be sure. I actually have to keep a legend of the months and the codes beside one of my monitors, just so I don't mess up on memory on which code is which month. Little cheat sheet for you to do at home. So yeah, look, no real trades jumping out at me today on oil. I have taken a little short on the Dow this morning. Very small little bit of a thing here. This tails what I was selling. Just this little push here down, and taken out of it on trailing stops, but was angling for more of a breakdown, but not to be expected really in the European session morning. So that's about it for me for another session. Thanks a million for tuning in. Got some sunlight coming in on the camera lens there, but listen, have a great session. I'm going to see most of you guys and girls in the Discord for this session a little later on, starting at 1 o'clock. And if you're watching on YouTube, please do click to subscribe and get in tune with everything that we're doing. Also, we have a new addition to the website, a blog and a daily macro rundown provided by Reed, our trusty in-house senior trader, and really good catch up every morning for the macro picture of what's ahead for the day. It is available from the European Open, actually just before the European Open, so you can get tuned in with that before you start trading DAX and Euro and whatnot, and Euro stocks. So do check it out. It's available on the website, free to all people who are just members on the website, which is of course free. And it's also available on our Twitter and LinkedIn pages. So do go and have a read. All right. Have a good session. I'll talk to you later.